Hello, my name is Mai and my student number is 184, and today I would like to present about Bitcoin breakout. Um, First, let me introduce about the content of today's presentation. I have introduction, then events, what happened, the reasons behind it, and potential impacts, and lastly is conclusion. Here is the summary of my presentation and my article in general. So first I want to introduce about the terminologies. Crypto investment, what is that? Actually, crypto investment is forming the highest conceivable gain managing numbers trading mechanisms. Its steadfast rational work, profoundly adequate veterans of distinctive allies like traders, analysts, experts on global moratorium, managers, developers, and programmers. So what actually happened? Bitcoin is on the move again. Price just about $13,000. It is up 18% on the year, which is outpacing the year-to-date returns from leading equity performers in the S&P 500, including the most infamous FAANG members. Actually, the performance is very impressive this year, actually. It is outperforming the S&P 500 by 1,600%, while the DJIA remains in negative territory. Why did it happen? The answer is macroeconomic trends such as massive inflationary spending from central banks that are debasing fiat currencies. Here we care about what are the potential impacts of the event. There are four potential impacts from this event. The first one is overall network health, such as record numbers of active accounts and computer power being used to secure the network. And second, so we care about PayPay. PayPal would allow its millions of US customers to purchase Bitcoin along with either like Litecoin or Bitcoin Cash directly from its app. And third, the fact that PayPal would expand its crypto support to its social payments app Venmo and make the offering available internationally in 2021 ensures that crypto investment will be significant in the future. Next, this announcement is capstone to several pieces of published news for Bitcoin, including major institutional allocations from publicly listed companies and multi-billion-dollar asset managers such as Square, MicroStrategy, and StoneRidge Asset Management. So, what kind of conclusion that we have from this article? So, actually, last time the price of Bitcoin was this high was during the climb down from the 2017 to 2018 crypto bubble. The soared its price approached $20,000, where there's no guarantee that Bitcoin will be revisit this lofty pitch any soon. Industry insiders are cautiously optimistic on this matter, is experiencing good bright side in the world of crypto and enterprise blockchain in the future. However, investors should have appropriate approach and strategy when it comes to investing in Bitcoin. Thank you so much for listening to my presentation, and here is the reference from Forbes magazine.
Hello, this is Takaya Gondo. I'm a Japanese student, so I cannot speak English as well, but please listening to my presentation. So this will be the content for my presentation today. Firstly, we will start off with terminology to understand a context better in depth. Firstly, conglomerate, a large company that absorbs the business of different companies at the business table and operated a multi-company business. Secondary, benchmark. Benchmark is basically an expression that means standard, level, or index. In some cases, it refers to an object that is positioned as a creation for comparative evolution, and in other cases, it is used in a sense close to target. Lastly is a tech. Abbreviations for high technology. Advanced technology, it files that will have a major impact on society in the next era. So next, what happened? SoftBank Group Club fell 7% as a conglomerate bets on equity derivatives related to list tech companies made investors uncomfortable in the down market. So why did it happen? The stock price fell below 6,000 yen for the first time in 2 months to 5,881 yen. This group was the largest loser with a percentage of the benchmark index N225, which fell 0.5%. Japan's financial powerhouse has spent billions of dollars buying stock in technology companies such as like Amazon because it stores the cash generated by large-scale asset sales programs. With an aggressive bet by CEO Masayoshi Son on the rise in the tech stocks, the group also told Reuters that it had made significant option purchases at the tech companies. According to the Wall Street Journal, the $4 billion option generated about $50 billion of exports. According to the Financial Times, the groups made $4 billion in trading profit from this bet. SoftBank previously refused to comment on the deal. And then, this group frequently hedged its exposure, and it is unclear how much profit the transaction will bring. And then this emphasized that the Son's risk appetite has not diminished, even though some analysts have warmed or really high valuations. Next, what are the potential impacts of the event? SoftBank shares have been boosted by record share buybacks in recent months, but the group has shown slower purchases and less support for shares. So, in conclusion, what is my opinion? So I think in the event of a tech bubble, Masayoshi-san is usually not too far from action. If he is looking for cheap tech stock, it may be better to buy more stock. Reference this one. Thank you for listening.
My topic is about fastest growing companies, 24 stocks expecting up to 603% growth in 2020. Here are some terminologies I picked in my news. First, IBD refers to Investors Business Daily. IBD is an American newspaper and website covering the stock market, international business, finance, and economics. The IBD 50 index is the flagship United States stock market benchmark. Second, S&P 500 index. The S&P 500 measures the value of the stocks of the 500 largest corporations listed on the New York Stock Exchange or Nasdaq Composite. The intention is to have a price that provides a quick look at the stock market and economy. Third, IPO. IPO refers to initial public offerings. IPO means a company that the first time to sell shares to the general public. IPO can be used to raise new equity capital for companies, to monetize the investments of private shareholders, such as company founders or private equity investors, and to enable easy trading of existing holdings or future capital raising by becoming publicly traded. What happened I want to clarify is on October 10th, 2020, fastest growing companies expecting 50% to 603% EPS gains. Zoom Video leads this list of today's fastest growing companies. Virtu Financial, PennyMac Financial Services, and Big Lots are also expecting triple-digit earning growth this year. Not surprisingly, many of the companies have also earned spots on various IBD stock lists, which have outperformed the S&P 500. Zoom Video, AMD, and NVIDIA have joined the IBD Big Cap 20, while PennyMac is on the sector leaders screen, which has outperformed the S&P 34.7% to 4.1% through September. IPO stocks to watch Zoom Video and Dynatrans are also on IPO leaders. For why did it happen? Due to coronavirus epidemic, people were discouraged to go out and work together. Thus, the applications and websites of IT areas thrives. For example, Zoom has become a popular way to work, learn, or socialize during the pandemic, said it made a profit of $186 million on revenue of $663.5 million in the quarter that ended on July 31st, as its ranks of users more than quadrupled. That compares with a net income of $5.5 million in the same quarter a year earlier. What are the potential impacts of the event? I think the event may accelerate the sell-off of the IT stocks. These applications and websites' popularity was declining when restrictions on movements ease and people can get back to seeing one another in person. That can unnerve investors. Also, Zoom Video, Netflix, NVIDIA, AMD, and countless others make their biggest moves when earnings grows. Technical action and the general stock market direction all come together. The following are my opinions. It is the opportune moment to buy IT stock if you want to invest. These shares soar as earnings rocket at this period. For an investor, it always pays to keep the fastest growing stocks on your radar screen. That's all. Thank you.